This is Richard Flax at Moneyfarm with our regular monthly update. March has been quite an intense month around the world, and we wanted to highlight a few important points. The Middle East conflict continues to dominate the headlines as the US, Israel and Iran continue to trade strikes. The Strait of Hormuz has been largely closed, and that's helped to drive the price of oil above $100 a barrel. Higher energy prices can act to raise inflation and reduce growth, and that's a challenging scenario for investors. The situation remains uncertain. We could see the straits gradually reopen, but there's still the potential for the conflict to escalate. In any event, the longer energy prices stay high, the greater the impact for the global economy. In terms of financial market performance, we saw some equity market weakness, with global equities down around 7% in the month. We think investors overall expect the conflict to be relatively short-lived, with a limited impact. That's an important assumption. The longer the conflict continues, the greater the impact on the global economy and global markets. Digging into the details a bit more, there's some interesting points to highlight. First, bond yields generally rose, driven by concerns over inflation. So longer-dated government bonds didn't provide much diversification. Shorter-dated bonds were more helpful. Gold was also interesting. Looking at history, you might have expected gold to act as a safe haven. But on this occasion, gold was among the weakest performance in March. We think that's partly because of investors taking profits after its strong performance over the past year. In terms of key questions for the months, there's a long list of important questions, most of which are tough to answer. The most obvious one is, how long will this all last? It's tough to know. The conflict has become more complicated as Iran has struck back not only against the US and Israel, but against a range of Gulf states. Attacks on energy infrastructure mean that it will take longer for energy production to recover once the situation does de-escalate. That said, the biggest focus of attention is on the passage of ships through the Straits of Hormuz, and here we have seen some small signs of progress. Key data points for the month. We've already mentioned the price of oil going above $100 a barrel, but the other notable figure was 5%. The UK 10-year government bond yield briefly went above 5% in March, reflecting concerns about higher inflation and the prospect of interest rate hikes. The higher cost of government debt makes life tougher for the Chancellor as she tries to free up cash to spend on public services. As we think about portfolio positioning, there are a few points to consider. We've seen government bond yields rise quite sharply in recent weeks. Having sold some longer-dated UK government bonds around the start of March, we're now debating whether or not we should look at them again. It's been a challenging few weeks, particularly for bond investors, but we continue to believe that a long-term focus and a well-diversified portfolio remain key to navigate through this latest bout of market volatility. Thank you for watching and look forward to speaking with you again soon.